Hello and welcome. You're watching Business Today Television. I'm and this is the earnings special edition. Skill and Talent Development Company NIIT on Friday reported its consolidated net profit of 11.16 crore rupees for the quarter, and the company, remember, had posted a 9.36 crore rupee loss in the year ago period, so it has turned black on a year basis again. Now as we talk about the revenues from operations in the Jan to March quarter, that has come in at 74.3 odd crore rupees, and that's a 23.8% jump from the year ago period. For FY24, we've actually seen the net profit see a multifold increase to about 38.3 crore rupees for the company against just about 3.17 crore rupees of profits that the company had posted. Now, as far as the revenues from operations are concerned, there we have actually seen a dip of 11 odd percent to 303 crores versus 341 odd crore rupees. Now, to understand more in detail as to what has really gone well for the company in Q4 as well as for FY24 and the guidance going forward from here as well, I am now joined by the top management of the company. Mr. Rajendra Singh Pawar, the chairman and the co-founder of the NIIT Group, now joins in on the show with us on Business Today. Warm welcome to you, sir. Thank you so much for taking the time out. Truly appreciate your presence on Business Today Television. Do tell us and our viewers, sir, how have you yourself assessed the Q4 earnings as well as FY24 earnings for you? What has really worked well for you and what did not keep up to your expectations this time around?
So thank you, Sakshi, first of all. Nice to be here about a quarter after we last had a long chat. And I think whatever we talked about, I was just taking a look at what we discussed. I think it's panning out as we had expected and as I had mentioned. That it's been a year of turnaround after the big shock that came in the last calendar quarter of 22 with the IT companies pretty much stopping hiring. So we had decided, as I mentioned earlier, just repeat a bit of it just to get the context correct, that we had shifted gears quite significantly and that the changes we introduced are what we are driving and what we are looking at in the future. So first, let me talk about the quarter. I think the quarter is symptomatic of how subsequent quarters will be. So to start with, over the same quarter last year, which is important in our cyclical nature and also in this turnaround, the growth has been 24%. And let me at the outset say that we expect this kind of growth going forward for this balance of this financial year. So we should end year over year with that or higher growth for the year, first of all. Second thing I had mentioned is that we are making a lot of shifts, a lot of investments. And those investments will continue this year. So our margin, you saw, which was for the year at 2%, we expect that to grow at the operating margin level, but not very significantly in the next year, considering that there will be a lot of new things happening. So it will be higher than that, and it will be a mid-single-digit range of margin. And that is because we are going to be doing a lot of new things. So now, about what all we did, just carrying forward, I talked about the fact that IT hiring at the entry level, we expect it to remain subdued for a few more quarters. Maybe the next academic year, when it ends, those students perhaps will have better news than the students who are coming out this year. So in IT, the shift is much more towards senior people and their training. And we have introduced a number of programs aimed at senior people. I specifically, I think, mentioned, if not, I should mention that digital architects, which is very senior people. The programs there are doing well, and we expect more such programs for the middle and upper level people, technical people in the IT field to benefit from those programs. The programs which have accelerated and will continue to do well this year as well are in the BFSI segment, because there we started going to wealth management, to higher level programs, should we say, going up the value chain. And there is good uptake, and there is the growth in that sector itself is strong. So both entry level as well as more senior level programs in the BFSI will grow. So these are the two main drivers of growth. Within IT also, I think we mentioned that the GCCs are hiring, while the GSIs Large GSIs are not hiring. But the tier 2 GSIs have also been hiring. So the thrust has been on emphasis on GCCs and tier 2 GSIs. Some of them are growing very well. So the IT plan is in line with what we had talked, and more of that will happen. The BFSI plan, which was showing good traction last time also, if you remember, in the quarter we had spoken, we expect that to grow very well. And I had mentioned that there are new areas we are studying. Within technology, Gen AI is an interesting area. I would say interesting because it's catching the attention of people. Since we last spoke, I think the excitement has only gone up. But I also want to mention that Gen AI is an area where there's some caution as well. And the caution is coming from issues like privacy, issues like data integrity, issues like cyber risks. So we are actually at this time telling companies to embrace Gen AI for personal productivity applications. And I'm actually reminded of the 80s when computers were introduced, and we were telling end users to start dabbling with these rather than major shifts in the underlying architecture overnight. So the thing now is basically that in Gen AI, it is more Gen AI literacy which we think is important. And Gen AI also helps individuals to be far more productive. I think it's a very important thing to note because Gen AI is not about data processing. It's about language processing. So every worker, some more in your field of content, very much more, you only deal with language. But even in the corporate world, there are functions like marketing and sales. There's a lot of communication they have to do. Individuals have to do. And then all the internal reports, the analysis, there's a whole lot of work which is around language processing, where we are not going deep into the databases of the corporation. We are not going into too much data from outside as well. So the higher level applications, the user-oriented applications, the individual level applications are what we are actually really encouraging companies to embrace so that they become comfortable with Gen AI. And as organizations learn how to protect the data, how to deal with privacy, how to design systems which don't let the risks of Gen AI get accentuated, that will take time for organizations to do. And also the mainline applications of the company and the main databases of the company, I think there is still a lot of precaution needed by companies. Also dipping into the global data from outside. You don't know what you're bringing in. But giving this thing to say that Gen AI is important, I think there's a concern about the risk. And the way to race ahead is for companies to embrace it for user level productivity, which in itself can be very beneficial.
Fair enough, sir. So you've highlighted quite a few points in your opening answer, and this does cater to a whole host of points that I will dig deep and understand more in detail from you, especially on the IT hiring front, which you have highlighted that probably things look up when it comes to the senior people now. But overall, the commentary from large IT firms and even mid-cap IT firms in this Q4 that I have had with them, there is still a lot of uncertainty. They do not know by when do they actually see visible green shoots of things improving for them, and therefore the headcounts declining, and therefore of course they are going to go to the colleges to do that fresh hiring, but at the same time it could be lesser than the previous fiscal year is what we are given to understand.
Yes.
I want to understand from you at the same point, sir, is a lot dependent on how the Fed really decides on the rate hike and how US markets recover, and by when do you really see that happening so that we do know that IT back home is on the course to revive?
Well, it's difficult to say. There are far too many factors at play. But I would only say this, that as I mentioned, and I'm willing to kind of say that rather forcefully, that this year's output from the colleges has huge challenges. By the time we come to the next academic year getting over, we should be seeing reasonable hiring going on. Of that, I'm reasonably comfortable because we have to remember that our companies are growing. It's not that IT companies are not growing. but they overhired in the 22 period when there was an unbelievable shortage, and you would have reported that quite actively. So that overhiring will, pan out over a period of time, and then people get absorbed. So the fresh hiring from the campuses in larger numbers will happen same time next year. In the meanwhile, also remember that uh, domestic usage of IT is also accelerating. And the whole Digital India plan, we should not underestimate what that is doing to usage of IT. We should not underestimate what our startups are doing. So there's a bit of a slowdown, but the hiring by startups for bright people is on the uptake. We find that in our own university, and they're compensating very well, but it gets shrouded under the larger narrative. So the Indian startups are hiring very well, and therefore people with the right skill are coming in. And I do expect that the overall growth of the sector, the IT sector, if you combine the GCCs, mid-sized GSIs, there are a number of mid-sized GSIs which have grown very well and are hiring. Of course, the big few who will start in the next few quarters. Give it a few quarters, they still have people they overhired who are being brought into the system. So that overhiring also is actually created trouble for students of this year because they're being absorbed as we go along. So net, I would say this time next year, hiring should be in good shape.
Okay. Now coming to two more segments. One, of course, BFSI you did say is showing an improvement, so that is definitely a positive. Gen AI, you did sound some caution, but at the same time you did say that companies should now embrace Gen AI, especially on a user level, on personal productivity. That is going to be auguring much better. The company had also announced earlier, I think, the incorporation of Gen AI into existing digital marketing and full stack software engineering programs from your side as well. So what kind of potential now do you see for FY25 on these aspects?
So, since we last spoke, this is not too long, 1 quarter. I think this is picture changing quarter after quarter. Let me tell you, in October, I was with NLSL, international customers, a group of customers, talking to them about Gen AI, embracing it, and they were hesitant. March this year, when we had the international customer conference in the US, the picture had changed. Virtually every chief learning officer there was saying we are now working with Gen AI in some way. Similarly, last time when I spoke to you, we were just about we had included Gen AI in all our entry-level programs ourselves. Even though people hadn't signed up for them, we were adding the module to say everyone who comes out of NIIT should be in a position to bootstrap themselves. Yes. But in this time, there are at least 3 companies where this whole embracing idea has caught on. And in some, it's a few hundred people. In some, it's a few thousand people. Of course, light touch. Because when it's personal productivity, it's about getting people started. And using our own methodology where we have to do a little bit of classroom, but much more of hands-on. So very tight loops, we call them sprints. So you can do this Gen AI reasonable amount of work for personal productivity in short sprints, but very guided sprints. So as I mentioned earlier, to me, it's reminiscent to me of the 80s when we were doing the same thing for large corporations to say, embrace IT. I think it's very important that we recognize that heavy lifting AI applications take a lot of energy, a lot of capacity, a lot of computing power, and Gen AI will take even more. Takes even more. But we are not currently proposing that companies jump into that because, as I mentioned to you, the risks, the mitigation of the risk is work in progress. So we are encouraging those companies who are looking at it seriously to do the mitigation training first to see what are the risks if you are taking data from outside. Though, as you know, the large providers of these tools are saying we'll protect you against any legal cases. But still, I think it's wise for companies to be mindful of touching their corporate databases with Gen AI. They have to build the proper guardrails, the proper software, the tools, the boundaries. And also, end users should have defined and restrictive use of corporate data, and they should have guidelines of what to get from outside if you're using an application. When you do light touch productivity application, these risks are manageable and are very low, and in some cases non-existent.
Okay.
So
Right.
it's about spreading the whole story at this time.
Understood, sir. So, sir, for you personally now, FY25, what is the growth outlook really looking like on top line, on profitability basis as well as margins? If you could tell us, you did say that we are looking at mid-teens in the margins. What about top line and bottom line, sir? What kind of growth can we expect?
No, so it's not mid-teen. So let me first say that revenue growth this quarter was 24%. We should exceed that for the year is our current outlook for the coming year. Because you remember, we did have drop in revenues last year. So there's that easy thing and then more to add on that. So it should be in excess of this number.
Okay.
Margins, this quarter was 2%. So it will get better, but we are investing in this growth as we go forward. And we have a couple of new areas. I talked about them briefly, but we'll talk in detail as we come forward.
Sure.
We're saying we did IT in the 80s, started it in the 80s, we started banking in the 2000s, and it's now there are newer areas on the horizon, and we have been working at those. Much like we're working with GenAI for more than a year now, but it takes time to talk about them to be ready to deliver. So therefore, margins will remain more than 2%, but maybe 3 to 5 range is what we'll look at in the coming year, and then subsequent years we'll see that go on.
Okay. And how about, sir, as far as, your growth in segmental performance is concerned, both career segment as well as the working professional segment, what kind of growth do you foresee?
So I think the emphasis in this period where jobs are challenged has been towards people who are in service to upgrade them. So even the companies, the big GSIs who are not hiring in large numbers, we still do a lot of training in service for them, for upskilling and for skilling in newer areas. So that thrust will remain. And we are, in our NIIT digital business, we have actually in some ways gone back to the drawing board to rebuild the new delivery engine, delivery model. That's what we are looking at. And we will re-engage with the college community, which was our focus in the 80s and 90s, as we prepare the newer generation for the newer technologies that are in front of us and also newer spaces. So cybersecurity is an area of interest. It will be very pervasive. I think each of us who has a phone is a source of risk, as you know. So because if a parent lends their PC at home to the child to play some games, he could be introducing some risk. So cyber is becoming important, and with things like GenAI, as I mentioned, making the guardrails. And cyber, one is the cyber security angle. There's a bigger question which is becoming important, that is privacy. When we are accessing data from anywhere or we are letting our people access the corporate data, the privacy issue is important. And I think the EU has taken a lead on that part. India has got its bill. Now we have to convert them into rules. So privacy is also going to be a very important part of education, and we see that also will be creeping into everything we offer to our youngsters as we build our B2C business, rebuild our B2C business.
Okay, wonderful. Well, thank you so much, Mr. Pawar, for being with us on this special edition and detailing for us all these key insights as to what the company is really focusing on as far as growth projections are concerned, the areas of focus as well. Many thanks and all the very best to you, sir, on the upcoming quarters, and hoping to see you back again on Business Today Television to discuss more on the IT trends as well as the other areas of focus like you've detailed, GenAI, cybersecurity and privacy. That will be more interesting conversations to follow going forward.
Thank you so much, Sakshi. I look forward to our next meeting. Like I referred to the last meeting, I think it makes the narrative continuous. I look forward.
Absolutely, absolutely. Thank you so much, sir. Truly appreciate your time with us. With that, Viewers, we wrap up this very special conversation with Mr. Rajendra S. Pawar as far as NIT's earnings are concerned, what contributed and what are the key areas of focus going to be for the company going forward from here as well. Many thanks for being with us, but do stay tuned. Earnings conversations to follow as well as daily calls that will come at 12 noon, which will address all your stock related queries. Remember, it's the last week before the biggest event of the year, and that's the election results. So ahead of it, what kind of strategies should you follow on your stocks that you're holding on your portfolio? Start writing into us on daily calls, and then we will be including your calls and your queries in that show. Hello and welcome. You are watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show where we address